2 years ago, we shared a comprehensive video about vacation rental insurance that we called Vacation Rental Insurance 101.
Besides being like the second video we ever filmed, and looking back on it, it's a little bit cringe to watch, it still covered all of the basics for insurance for your short-term rental property.
A lot of what we shared in that video is still applicable today, but the insurance landscape has changed dramatically in the last couple years, so we figured it was a good time to do an update video.
Yeah, you gotta stay current.
Today we're going to go over a standard insurance policy and go section by section explaining what it all means and also the coverage amounts that we like to see at our own properties and also for our clients.
But we're also going to go over some of the big shifts we've seen in the insurance world, things like companies pulling out of entire states or some new entrants on the scene that have limited coverage or sometimes no coverage for basic things like water damage.
So with all of these setbacks combined with an increase in Airbnb's air cover, is having specific coverage for your short-term rental property actually necessary? Let's dig in a little deeper and find out.
All of the information we're sharing in today's video is for general information only. Any action that you take is at your own risk, and we really recommend you contact an insurance professional. We'll link ours in the description below.
If you're new to our channel, we are a husband and wife team of real estate investors and property managers.
We currently manage a portfolio of about 50 properties, and that's a mix of properties we own ourselves, some that we manage for others, and it's primarily short-term vacation rentals, but we do also have several mid-term rentals as well as one long-term rental that we own ourselves.
And the only reason we're mentioning all of this is because with this large portfolio, we have seen a lot of insurance policies from a lot of different carriers. We've sought these policies out for our own rental properties, and we've also coached clients through getting them for theirs.
And unfortunately, we find during most of our client onboardings that they aren't properly insured.
Historically, there have been big knowledge gaps in the insurance industry when it comes to short-term rentals and how those policies should be written. Meaning that unless your insurance agent was well-versed in short-term rentals, you were likely going to be given just a general landlord policy, which does not explicitly cover short-term rentals.
Not covered by insurance.
We would have thought that as time went on over the last couple years, maybe the landscape would change and insurance providers would be well-versed in what a short-term rental is and what coverage is required, but it's not. We still get a lot of policies that we first see from new clients, and it's just a standard landlord policy.
When we bring that up, we're often met with a response like, isn't that what Airbnb's air cover's for? And the answer to that is yes and no.
Air cover has improved over the last couple years, we'll admit that, but there are still gaps or risk areas when it comes to what they will cover.
Air cover is ideally good for small claims when a guest has damaged something at your property and is refusing to pay for it. Claims that you wouldn't necessarily want to take to your insurance carrier because maybe they don't meet your deductible limit, or it would result in your rates being raised.
In the event of a big time claim like a guest burning down your house, we've read a couple horror story accounts where someone has applied for an air cover coverage for that and Airbnb has found some loophole to not pay out, and these owners are stuck.
Not our problem.
It's just not worth taking the risk and banking on Airbnb actually covering that claim. You definitely need an insurance policy that is going to cover any of those big ticket losses.
And if you ever plan to take direct bookings or bookings from other platforms, which we do recommend, then air cover isn't around to cover those bookings.
So think of air cover as an added layer to your insurance policy, but not a replacement for your insurance policy.
Unfortunately, it's becoming more and more difficult to find an insurance provider who will give you a policy that explicitly covers short-term rentals.
A whole list of major insurance carriers are pulling out of a lot of states, and this trend has significant implications on hosts, especially those of us in high-risk areas.
Absolutely. In states that are prone to natural disasters like California with wildfires or Florida and the Gulf Coast with hurricanes,
Iowa with tornadoes.
It's becoming super difficult for those insurance companies to make a business case around insuring people in those states, and therefore they're either raising rates like crazy, not renewing people, or just pulling out of the market completely.
This withdrawal leaves property owners in a tough spot, scrambling to find coverage for their properties. Without these big players in the game, options are more limited, and with scarcity comes higher prices, so higher premiums and sometimes with less comprehensive coverage.
It's crucial as a host first that you try and stay informed of these changes as they happen, because when renewal time comes, you might be left with the option to renew with that provider.
So proactively reaching out to your insurance agent or broker can help you stay ahead of any of these changes and not leave you in a spot where you have a gap in your coverage.
Additionally, you should keep an eye on your state's regulations and watch out for new companies that might be entering the market.
There are some newer companies that are stepping into the market, but be a little bit cautious with these ones. Some of these newer policies are known to have more limited coverage for what used to be essentials like water damage and your roof.
We've also seen things like companies not covering older homes. Some are even having a hard requirement that the home be 20 years or less old, and that just seems crazy. 20 years, there's a lot of houses that are older than that. So you have to watch out for that. And then also, legacy companies are also trying to limit their coverage on things like water damage and roofs and things, just to minimize their costs and minimize the claims that they see.
It's not covered by the insurance.
Options for insurance companies is going to vary state by state, but right now we're seeing Proper and Steadily have a pretty good nationwide coverage.
Foremost, Mercury, Travelers, American Modern, and Bridge Specialty are some other companies we've seen policies for in the Southwest, but we know that their availability is limited, not in every state. So your key takeaway here is to be proactive and thorough. Try and get quotes from everyone you can.
Especially if you're in a state where a lot of these major players are already pulling out, it's good to just start shopping around a little bit now and keep your options open in case you do get dropped.
When you do get quotes, you'll also need to look through all the policy details to make sure there's no uncertainty or limited or missing coverages for things that you hope you'll be covered for.
And if you are shopping for a new policy, once again, we will leave the name and contact info for our insurance broker in the description box below.
And we don't get any kickbacks from him. He's just a good guy. He knows this market. He's served us well. So hopefully he might be able to help you out too. So now we're gonna split the screen here. We're gonna put up a policy from one of our properties. This is a duplex in San Diego, California. It's 2 units, with one being a 1-bedroom, 1-bath, and the other being a 2-bedroom, 1-bath.
And it's a total square footage between the 2 units of around 1,000 square feet. This is the policy coverages section, and the policy is with Mercury Insurance.
At the top here is our deductible details, and right now we're at $2,500.
This is a pretty standard amount, but raising or lowering that deductible amount is going to impact your policy cost.
And when you're thinking about your deductible, we'd like you to kind of consider your insurance as something that is going to be there for big ticket losses and not something you're going to be able to make claims for all the time.
You could make claims all the time, but then your cost of your insurance policy is going to go up, or you're just going to get dropped.
And if you do have a claims history from a previous company, going out and shopping for new insurance is going to be more or less impossible. Don't do that if you can avoid it.
And the insurance company won't pay for it.
We've just come to accept that there may be a need sometime to handle an issue that's a few $1,000s or less, and we just have to do that and not rely upon our insurance coverage for those small things and save it for big ticket losses.
But that doesn't mean that you're going to have to come out of pocket completely in the event that a guest damages something in your property and it doesn't meet your deductible amount.
If they book through one of the big booking platforms like Airbnb or Vrbo, there are means to reconcile claims there through things like AirCover, like we mentioned earlier, or Vrbo does have a claims resolution center.
And if they book directly with you and you collected a security deposit, then you could potentially withhold a portion of that to cover the damages.
The next section on this policy is dwelling coverage, and that is the cost that the insurance provider will pay in order to rebuild your home in the event of a complete loss.
Insurance companies have formulas based on the square footage of your property to calculate what this coverage is going to be, but you can work with your agent if you feel like you might need to raise it, if you have special features in your house that might cost more to rebuild.
The coverage level at this property in particular might seem low, but when we look at it, it's simple cottage construction and then a garage with a unit above that. There's really nothing special here, so their formula of about $300 per square foot for construction cost is what this amounts to.
The next part of this section is fair rental value, which you'll sometimes see written with other companies as loss of use coverage.
This kind of seems self-explanatory, but what this means is this is the amount of coverage that you have in the event that you're no longer able to rent your property due to a catastrophic loss like fire or flood.
You'll want to set the coverage to a level that matches what your property would generate or what you would expect it to generate during that time off market.
It can take 12 to 18 months to completely rebuild a house if it was completely lost. So we like to think of sort of that 18-month time frame and set that fair rental coverage value to that.
Below that is other structures, and generally that would include something like a pool or a casita or some other sort of usable structure on the property, aside from the main house.
In this case, I suppose it would cover the garage. This other structures coverage is usually just a default part of every insurance policy, somewhere around 10% of the total dwelling coverage, so it's probably just there. And if you have a special structure or additional structure, you should make sure that the coverage amount there represents the replacement cost of that thing.
And your agent will be able to work with you to adjust that if you need something above the standard default amount.
Next up is the liability section, and this is an important one. We like to see this at $1 million for our properties.
You'll sometimes see this worded as per occurrence premises liability, and this section is essential to protect both owners and managers in the case of a guest liability claim.
While the likelihood of a big liability claim is low, adding this $1 million liability coverage isn't going to be a huge portion of the overall policy cost.
And you can rest easier knowing that you do have substantial coverage if you ever need it.
Well, that's a relief.
If you do use a property manager, you'll want to make sure that the company will allow you to extend that liability coverage to others like them.
On our policy, it's further down where it says liability extended to others / covered, but other companies will call this additional insured.
In either case, we as a property manager always make sure we're listed as additional insured on our owner's policies.
Medical payments is meant to cover minor injuries that a guest may ask for reimbursement for if they were injured on your property.
We usually keep this amount small, whatever the default coverage is, because we do have the $1 million liability coverage that would kick in if there was a big claim for some liability issue.
But this is just our personal experience. You should absolutely talk this over with your legal counsel and or your insurance agent just to figure out what's right for you and your property.
Below the liability section is protection for your belongings or personal property.
Sometimes you'll see this written as household furnishings coverage, which is pretty self-explanatory.
What's important here is to fairly judge the value of the contents of your house.
In this particular example, we did the setup, purchased everything in the house, so we have a good idea of the total cost.
So be sure to keep a good record of your costs when you're setting up your property. You should be doing this for tax purposes, and this is just another reason to have those good records.
So these are just the main sections on what you would find for a standard insurance policy, but we would encourage you to take a close look at yours and make sure that you really understand everything on there.
What we've shown here is called a declarations page, and it's kind of like the summary of your policy. But when you get a policy, you're going to have this big packet of information with details on what's covered and also usually details about what's not covered.
If you have any questions about policy specifics or if there's any sort of ambiguity on how your policy is written, we would encourage you to reach out to your insurance agent or broker and get something in writing from your underwriter just to clear up any sort of gray areas.
Having a knowledgeable and trustworthy insurance provider has always been important, but now we really feel like it's more important than ever.
We've worked with Mike Mauger for years. He works with a bunch of our clients. We've been super happy with him, and it's just nice to have someone that you trust.
He keeps tabs on the ever-changing landscape of providers and their restrictions and what they're doing, and he knows the coverages that make sense for vacation rental policies. So give Mike a call, or if it's not Mike, find someone in your market, someone who really knows short-term rentals and your local area who can help.
Feel free to leave any questions in the comment section below, and we'll leave another video here on screen we think you'll want to check out next.
Thanks for watching. We'll see you in the next video.